today? Were you certain that I was going to show up? No. Probably.
Hoping so.
Probably. You know, when you walked out of the house today, did you think you were going to get hit by a bus? Probably not. Yeah. Probably not. But could it happen? Fuck yeah. So you're driving, bro. Fuck yeah. So everything is probabilities all the time. It's like life is a game of probabilities. And people just say that shit because it's corny, but it is so true. And like you never know what life's going to throw at you. Trading is the same way. So when probabilities are being discussed, what would make the most sense? Would it be something, and let's just stay focused on number one. Would it be something where sentiment is in one zone all day between a 50 and a 30 value, which we would call the sell zone? Is that a better sentiment than if we were to have something let's find one like that? Like this, where from the start of the day, it comes up into the buy zone now, sell zone, and then into buy zone, and then now it's back in the sell zone. You see the yellow line crossing the black dotted line, right? What's more probable on that day? The one that's in one zone. That's the point I'm trying to make. Does that make sense? The one where sentiment said, oh, sellers are in control. Oh, no, buyers are in control. Oh, actually, just kidding. Sellers are in control. Less probable. That's all it means, less probable. So when you think about probabilities, perfect L50 is going to be more probable than swapping. Does that make sense?
Yeah. So the entire day is either below or above. There's more consistency.
Exactly. So then when you think about building your watch list, if we want to win, and we don't need to trade a lot, we want to make money, we don't need to trade just to trade, we want to trade to fucking win, where do we want to focus our attention more? On swapping or perfect?
Perfect.
I knew you were smart, bro.
And you're looking at the perfect or swapping trend of the previous day?
From the changeover of day to the point where I wake up. So like this morning, let's just pull up a live chart. This morning, the guys were looking at shorting Euro JPY, and they would have made some money on this. I think Steven made some money on this. So they took a short position on this right here this morning as it comes off the 21 EMA. See the 50 value on the right side of my screen on the TDI right here? See how this is under the 50 value starting right here at this changeover of day? Because this line right here is the changeover of day. So because this is under the 50 and not oversold under the 30, it's in this zone, that's telling us to look for shorts. That's a beautiful L50 today. So how did the guys make money today?
Shorting. Now, if that yellow line was above 50 the entire day, then
it would never have even been on the watch list.
Would have been on the watch list.
No. Why? The EMAs are short biased. So now as we get through this, the next thing...
That's too much divergence.
Not divergence, because you wouldn't describe it like that, but let me explain it and you'll see. So in this situation, the L50 is perfect, so we got that. Now, the second step that was in my other slide there, the next thought process that we need to go through when building our... We're not even taking trades yet, we're just building our watch list. What do the EMAs tell me? Because again, back to the conversation about probabilities and confluence versus divergence. If we have a perfect L50, you follow me now, the L50 is the yellow line, you're good with that? If we have the perfect L50 in the sell zone, and the EMAs also say sell it, now we got the two things working in the right direction. Right. Confluence and trend. If the L50 says sell it and the EMA say buy it, not confluence, probably not making my watch list. At least not yet. Right. This is where we get a little more advanced. For you guys, I would say don't put it on a watch list. Yeah. Find perfect shit, trade in trend at first, let's win some trades, get your confidence up. But then, as you get more advanced, I would say maybe where he's at right now, you start to see, okay, today, there's no perfect L50s. Actually, there's one, but the EMAs don't agree with it. So we have no perfect trend. But that one with the perfect L50 where the EMAs kind of agree with it, let's go look at that one next. Because what's probabilities say everything else is not good, that's the next highest probability setup because of the perfect L50. So L50 is the first thing. Then we're looking for confirming. Sorry about my handwriting, fam. You guys get the point. This marker is strong, bro. I'm getting high just fucking breathing it.
Can you share?
Everybody pass the marker. So then you're going to confirm the EMA trend. And again, this is from Paul Tudor Jones. He's literally trying to find a reason to not take a trade every time he's about to take an investment. That's what we're doing here. Talk me out of this. Tell me why I shouldn't be short this. EMAs give me a reason to not short this. TDI give me a reason. Okay, you're both telling me to short this. Okay, fuck. You know what I'm saying? So it's like back yourself in where you're like, fuck, this is a trade. I got to be in this trade.
Due diligence in investing.
Exactly, bro. But think about how many of other, I mean, we saw the statistics already. Think about all the other people that are like just trading to trade.
Right.
That are not trying to not be in a trade. I'm teaching you guys in a sense to not trade, to back yourself into the trade rather than be like, I need that, that's mine, I'm going to get it. That's ego. This is, I don't know if I'm going to find anything today. Oh, wait a minute. That's a perfect L50. That's perfect EMAs. No. Okay, this is a trade.
It's like when you're on a date, it's not about, I hope the other person likes me. It's more like, what do I not like about that person?
That's exactly what that's another good analogy, bro. Yeah. All right.
You're good, you.
So here, just to break, since we're talking about this, why not talk about this as a trade, right? So this is, and I can even show you guys how the group was discussing it this morning. They crushed this trade. This has worked really nicely for them. I'm glad too, because it's Friday and nobody likes to lose on a Friday. So I'm going to put a vertical line right here so you guys can just see it a little bit more clearly. See how the RSI is under the yellow and under the red? See how the candle comes off the 21 and you see how the body is touching the 21? Those are the 3 bullets I just had up there that you just wrote down, right? That's an A1 entry. See how the next candle stays bearish? You're holding that 8 EMA. This is reacting to the downshift because previous, right there, see how the yellow is above the red? It's in an upshift. So you're not predicting the downshift by going short here. You're reacting once it's short and once the entry is proper. Does that make sense, Tyler? You following that?
Yeah, so that would be a shift candle, right?
Shift candle, yep.
And your stop loss would have been
much tighter.
Yeah.
For shift candles, stop loss is always, for any A1 entry, stop loss is going near the open price. This is a bearish candle, so it opened here and it closed here. The pin is the high. It's going to go right there near the open price. Crushed it, bro. Let's just check the chat really quick and see what they came out with.
Oh, yeah.
So now in Discord, when you join, what we just opened up last week for all members, not just for the Black Shirt Club, is if you go in, you'll see Peter's in here hanging out. Yeah, this guy's in here. TS, this guy, I know who this is. I just don't remember his name.
You wake up early, like 4 a.m.?
Bro, it's bad. Some days I tried to, like, some days at 3 o'clock, it's terrible. Like, I tried not to.
What time do you get to bed?
Like 8 or 9.
8 or 9.
Yeah.
I'd love to get to bed 8 or 9.
Yeah.
Oh my God.
I can't fall asleep before 12 or 1.
I was
Yeah.
gonna say,
My mind just won't fucking stop, dude.
It's a lifestyle, bro. I can explain how I got to this point, but it's taken me a long time. It was mandatory at first. Go ahead.
For a DJ.
Well, I was gonna say,
It's the opposite.
About him getting to bed, though, making a point to get to bed by like 8 or 9 so you get that sleep in. So when I first, again, like I said, now 3 years into it, when I first started trading and getting into it and trying to figure out my own plan and then finding that other trader, like you talked about the Asian range. So I was working, right? And I had to be up by like 4:30, 5 a.m. every morning to get to work. I was going to bed at like 10, 11 p.m.
Oh, bro, your body hated you.
Yep, but I was also waking up by my
Right.
own choice, setting alarms in the middle of the Asian range because in my mind I was like, time to trade, right? So I would have alarms throughout the night going off so I could get up and check on the charts.
You probably
And
didn't
back
get a
to
good night's sleep for months, bro.
I fell asleep because I was going to work one day.
I bet.
Yeah.
Wow.
It was a mess. Yeah, don't do that.
It's easy to talk about and it's fun to talk about, like the stuff off trading. It's not as technical as all this shit, but it makes such a difference. I do not like talking about meditation that much. I don't like talking about working out or yoga that much. But I talk about it because I really think that my routine and my discipline outside of trading has made me more disciplined and routined in my trading. It's made my brain perform better. It's consistent. How you do one thing
is how you do everything.
fuck yeah, bro. It is the quote of the year, bro.
Yeah. And not even just in trading. I mean, like, because I'm just now getting, like, into the trading, like you said, into your stuff. But, like, I started with routine, getting myself fixed from that point, right? And getting into routine just all around better life. Like,
Better life.
Routines in the gym. Routines, like, with everything. It just, your day goes smoother with whatever you're trying to do.
100%.
So, yeah.
So let's just check this really quick. So yeah, the voice chat's cool. Let's see. So we don't want to do that. Connor had a good trade today. Tom didn't trade today. Let's see. So here's Steven. Notes from EJ. Never gave me a reason to get out. Definitely should have had a piece on as it holds the 8 EMA. This is Steven's markup in there. Send Steven a message.
James kind of has it nice with his time zone. He's
Yes, he
gotta
does,
get
bro.
up early. I want to move to Spain.
That's another cool thing about it.
You guys can juice from anywhere.
Yeah.
So now the power of this trade, and this is a little bit more advanced, so I don't want to go into it too much, but this is Steven's markup of Euro JPY on the 1 minute. So what he's actually explaining in here is this is where I'd like us to get in the afternoon, at least to touch on a little bit, is how the D1 and A1 work together, because it is so easy to trade. When you trade a lot of A1 entries, like this example, that's a shift candle. Beyond the fact that it's a shift candle, if I go like this, and I click on my indicator, and I turn on my Asian range indicators, look at that.
Yeah.
See that?
They're becoming picky about that.
I know. So if you turn on that Asian range indicator, and let me clean this up a little bit just so
I'm
you
gonna
can...
ride on the boat before we leave.
We could, bro. I honestly thought about it because there's only 4 of you. I'm like, maybe we should be doing something like that next time instead. Because I had three more people, and then that would have been too many people. But once one guy this morning even dropped out because he had a fever. I was like, don't come, bro. Come to the next one. Yeah. And even 5 people would have been tight because then it would have been 8. Yeah, we could have done it. Well, maybe we'll do that next time. That is a good idea. But the point here, so you see this line down at the bottom, line at the top, that's the Asian range, right? It shows the first 8 hours of trading. And normally that's the consolidation, the accumulation period. One of the rules, and you're going to see this as you work through the course and as we talk today, is you probably know, trading inside the Asian range is tough, right?
Because it's usually not volatile?
Exactly, until it breaks out of the range. Because we want to see, imagine that you didn't know this was going to drop. Look at all the sideways movement in here near the Asia low. It's very choppy. So to trade before it breaks the Asian range is almost like forecasting, rather than waiting for it to break with a body and then reacting and getting a trade on it later in the day. And if you actually read the chat, yeah, I might think this is Tom and Steve talking about that trade. I think it might be choppy due to still being in the Asian range and the EMA swapping bias overnight. Tom is very picky. He's looking at how the 200 and the 50 are still above the 800 EMAs overnight. They could have been better. You see how now as the day has gone on, it's in order, 800, 200, 50, 21. That's the perfect order. So Tom is saying this could have even been, that's him being very picky, right? But they were discussing this morning that this was still in the Asian range and it could be a choppy trade. But Steven still is, I think he's a good trader. He will use the checklist and he'll say, well, what else is wrong with this? There's no divergence on the bottom that would be bullish, that would tell you it could change and go up or change and go sideways. The only thing that's wrong with it that's in the Asian range. So he still takes the trade and he ends up making money on it this morning because he sizes down for it being in that Asian range and it's a viable signal. Does that make sense? Kind of? Half? Yeah? Follow me?
Yeah.
Okay. With this idea too, another important note, just because we're looking at this, anytime I see a trade that would be like this in the Asian range, if there was divergence on the bottom, RSI rising, price action falling, what does divergence mean? Change. If price is dropping and it's still in the Asian range and you're getting divergence, Asian range means it could be choppy, divergence means it could chop, no trade. Anytime it's still in the Asian range and there's divergence, I never trade it. Those are 2 signs that it could still chop. Just let it fucking break and then go in and find a trade later that day. And the way you can, that one rule alone will save you so much money. For example, we're going to talk about that. That's a D2 entry. If we blow this up really quick. Don't mind the stuff on the right. Just look at this here on the left. So when you talk about zones, I use what we call the 2 candle rule, and it's explained in the courses. You guys probably have heard me say it before. I'm going to find the high a day or low a day, and as long as the 2 candles to the right and the 2 candles to the left of that candle are not lower, that's where I look to draw my zone. So you can see 2 candles to the left are not lower than this pin, 2 candles to the right are not lower, so that's my zone. And it's also yesterday's low. Super simple way to draw zones, and it works really, really well.
And the zone goes from the bottom of the candle to the bottom of the candlestick?
It's all the wick.
Oh, it's
only the wick. Zones I always draw with wicks.
Okay.
Yep. So now notice, overnight, as this L50 here on the TDI, it's in the sell zone, it's under 50, right? It's telling you to look for shorts. This is a really good example, so try to follow me. It's telling you to look for shorts. EMAs say to look for shorts. Everything says to short it. What says not to short it? The divergence on the bottom with this rising white line, but beyond that, look at all the pins to the zone here set yesterday. So to that previous point about waiting for the Asian range to break and then you trade, just like we would wait here for this zone to break rather than trying to go short into the zone. Because what does it do? It bounces off the zone, uses the divergence as a D2. Remember I said it would make higher lows, or in that situation I drew it on there, lower highs. This is the higher low. Break at the 50, 8 crosses above the 21, and it carries on a D2 entry going the opposite way. Do you kind of follow me there, everybody? So let me just finish the thought and then go. Yeah, why I'm bringing this up is because Steven yesterday, as he just made money on Euro JPY today, Steven took this short yesterday, and I'm telling him in the chat yesterday, don't do it, bro. Wait for the low to be broken, because this was still in the Asian range. You see, up until this point, it gets out here. But when the entry presents, no bodies broke below this line right here. That little line is the Asia low. No bodies below. So not only were you trapped in the Asian range, but yesterday's low is strong support. 2 reasons. Let's just see if it breaks, bro. Let's not get a forecast in here. Let's react. When it breaks, we look for an entry. It never breaks. It does, but it can't get back under. So normally, you're not trading the first break, you're trading the retest. Here, because it breaks the 50 to the upside, and then gets back above the 50 here with a higher low and the bullish divergence, now you're looking at it as a D2 going the other way. So because Steven didn't wait for the break, he ended up getting burned yesterday here, but then today, by still trusting his rules, just maybe sizing down, I hope he did, he's able to go into the trade today. Yes, it's still in the Asian range, and it could have bounced off the Asian range low, but at least there's no divergence here. So he's just trading it like this. Here's my toolbar. So like for here, Vishal, where I would draw the zone would be right there. Why? Look at the 2 candles to the left and look at the 2 candles to the right.
Yep.
They're not lower.
Just the wick.
Just the wick. So right there, based on this wick right there. You see? Right. 2 candles to the left, 2 to the right are not lower. That's the zone. And look at how many times it hit the zone. So here, you size down. He likes this L50. He's taking the trade. And then look at the bias from the previous day too. Overall yesterday to the downside. L50 spent a good amount of time in the sell zone yesterday.
So when you draw those support resistance zones,
Yeah.
are you doing it from the previous day or just the day of? So right there, you did it the day of.
Yeah. So there's 6 levels that I would pay attention to. You ready?
Yeah.
High of day, low of day. This is low of day up into that point.
Right.
High of week, low of week. Yesterday's high, yesterday's low. 6 levels.
Okay.
Those are the ones where I'm going to look for those zones. I can repeat it. Yeah.
So today,
right.
yesterday, and the week.
Exactly.
Over 3
The daily highs and lows, the weekly highs and lows, and yesterday's highs and lows.
So checking those key levels and then seeing which one applies to the 2 candle.
Exactly.
Cool.
Which one's in your way? Because what he's looking for here, bro, is to make sure that nothing is in his way of getting short and getting this thing lower. Oh, there is a support zone from right here at the Asia low. Okay, where in our testing, anywhere in a course, if I told you to not take a trade because of a support zone at the low of day? Never. But to say I should go full balls deep into the support in this situation would be stupid. So what he does is he'll see the support and size it down. It's a knock on the setups. You know when you go through the knocks, swapping L50, divergence, what goes against the trade? It could be a small knock. Instead of hitting it with 1%, put 0.5%, 0.75. Just size down a little bit because if you do lose the trade, you'll have a reason to point to it. So that's when you size down. When you have I very rarely will find A setups. I always can seem to find a reason why it's not a perfect setup. But they're there. A setups will come. Most of your setups are going to be B setups, C setups.